And it's getting a little bit poetical, from Block Damon to Fireblocks, from Tim to Tim. Please welcome with me Fireblocks' one and only Tim Bruenjes. And I've heard you'll freestyle a little bit, so you feel free to take the mic and walk around if you feel like it.
Should I do that? Yeah. I'm definitely not going to show a presentation, so I'm going to do that in a freestyle format. I thought, like, too many presentations the whole morning already. People post-lunch hangover. So we have 20 minutes. A little bit closer? Okay. So we have 20 minutes today. It's obviously a lot of ground to cover. Quick intro myself. I'm Tim Bruenjes. I look after sales and business development at Fireblocks, parts of Europe. Like the other Tim said, also a trusted partner to Fireblocks, Blockdaemon, as many others in the room here. We're an infrastructure provider, a company that is still relatively young, 4 years of age. We had our strongest quarter just this quarter alone, adding close to 300 customers, close to 1,300 customers. Raised $1 billion in funding for such a young company. And when I joined 12 months ago, we were 75 people. We're now around 400 people. So shows you a bit of the scale of the company. As I mentioned, we're providing infrastructure for people to do really 3 things: build, run, and scale a digital assets business. So be the machine room, be the underbelly of whoever wants to engage with digital assets. We don't disintermediate, we don't take client relationships, we reduce ourselves to provide the best technology out there at scale, battle tested. I talked about the scale of the company. I think that's quite significant, 1,250 customers. When you think about how much actually is going through Fireblocks' technology on a 30-day basis, it's around 200 billion worth of on-chain transaction volume in US dollar terms. So that's quite significant, what is being facilitated throughout our technology. We operate globally. We have our HQ in Tel Aviv and New York, and we have centers in Asia, in the US, and obviously in Europe with Tel Aviv, London, Frankfurt, and other destinations. So there's the title, basically bringing crypto products to market. I mean, we think about this, and since we had obviously acquired lots of customers, supplying them with the best technology out there to really build their business, we also had seen many opportunities where we thought, well, this is not the right way to do this. And there's some common themes which I want to really discuss in these 15 minutes here to really give you some sort of like insight on the way we think, but the way our customer base thinks when they start scaling. And there's also some pitfalls where we want to talk about. There's 3 main things that are really important in our view. Also the real focus points of success: speed to market. So the speed to market is something we were on a panel earlier today, talked about regulation. Sometimes it takes longer to achieve the right regulatory framework. So speed to market is also vertical to discuss. What should you do if you don't have the time and your competition running faster than you, right? Maybe other companies out there, and we had seen some of the rather crypto-native companies yielding significant growth. Some of that probably on the basis of that banks are moving a bit slower today still. And again, this is something where banks should not be shy. They should be coming forth and also embrace buying the right technology and building up a digital assets business. So speed to market is important. Operational scalability and maintenance. So what I mean with that is, can you maintain the pace alone, or do you need a partner when you grow in your digital assets journey? Buy, sell crypto, this might be relatively easy. When you think about it, single venue liquidity, there's not much can go wrong here, but if you start adding more liquidity venues, you allow people to deposit and withdraw crypto, again, this becomes a very different piece of infrastructure you need to maintain. And the stuff we sometimes see is that, similar to speed to market, where companies might not have the luxury to wait for 12 months, 13, 16, 14 months, maybe also not having the right talent in place, trying to acquire the talent takes time, unfortunately. Developing the technology in-house, is that something that can be scaled over time and maintain the pace? It's very hard. That's definitely what we see. Maintenance, operational scalability, as I said, is important. Can you maintain the pace of innovation? Again, products and services, we heard this early on the panel also, innovation is moving so fast that it's really hard to keep up the pace alone, singularly in your own company. So therefore, resorting to a technology partner that is bound by servicing thousands or multi-thousands of other customers, getting the innovation from that angle is quite beneficial. So going a bit deeper into speed of market, so the decision points we see over and over again is like, are you going to internally build this, or are we going to partner with a company that will bring the technology in-house? So that's really something we see over and over again. It's really very much a playbook. The second vertical, as I said, is the customer needs and the strategy. We had seen customers out there, or prospects out there, they very much started it with a custody-first solution. I just want to build custody, i.e., Fireblocks give me the technology so I can safekeep the private key material for my customers. And then that stopped, basically. It didn't go further than that. When we think about this, it's really the base foundational layer, almost like a pyramid. You build a very solid foundation, but the real business opportunities will come on top when you allow people to trade, buy, sell crypto. Blockdaemon just talked about staking. I think 2022 will be also the year where buy, sell, something is not good enough, but where people really look at their relationships to companies to say, I own 2 Bitcoins or I own whatever crypto asset, how much yield can I get off that? Because it's out there, it's possible, and that's kind of like the minimum benchmark we see definitely arising here in 2022, and it's going to be much more powerful when we even reach 2023, where other products and services will be there, which we're not aware of today. Maintenance. So maintenance, again, the customer experience. Are you willing to deliver all these services that are needed? And do you have the means to, A, build this in-house, or again, do you gonna resort to a partner like Fireblocks or others, like Blockdaemon for staking and others, with quite an open ecosystem to bring them all into that very same technology basis. Another element we certainly also see is having the right developer teams in-house. Sometimes that's not easy. There's so much focus to maintain the other parts of the business, and then becomes quite a fight where like the developers are being like thrown between one and other opportunity. And again, there's scarce resources, so leveraging the expertise of a partner could also be quite beneficial. Operational scalability. So what I mean with that is, I talked about the term custody, one venue liquidity. That's very easy to manage. You have one liquidity provider, and you can buy and sell against that liquidity provider on the basis of your customers being allowed to buy and sell crypto. But the term best execution regulation will walk in, so best execution allowing many liquidity venues to stream into your premises and giving your customers the best price becomes a very important factor as well to maintain. Again, that makes it extremely difficult to connect to all these venues. There will be folks at AlgoTrader, for example, who do an excellent job. These are partners to us, again, at Fireblocks, where we allow sort of like the venue, the multi-venue liquidity to stream into one single pane of view into Fireblocks. Scalability, well, I think I talked about this already. We have more than 1,000 customers. Some of them are the most scaled crypto businesses in the world. They do trade billions of dollars on a daily basis, create millions of wallets on a monthly basis. So it's very, very important that you obviously supply yourself with a technology that is truly battle tested and out there and to scale. The last thing I want to say is crypto treasury. So the crypto treasury thing is eventually anyone who's buying technology, who is a custodian of custom assets or their own assets needs to think about how to move assets around. Security is a very important factor. We do hear a lot that there is security hacks and breaches out there. Again, this is a very big issue. If a crypto is lost on the blockchain, it's lost potentially forever. It is very hard to recover. We all had seen pretty scary moments that assets had gone missing forever. And it's a factor of risk and risk mitigation by applying the right technology. Again, this is the first technology solution is an important factor to really solidify your own premises and make sure that you are safekeeping your customer assets at the best possible way from a technology basis. I also got to say this is very much an iterative process. You can't just say that I bought technology and it's all safe now for the next 10 years to come. In the end, it's all cybersecurity. At heart, Fireblocks is a cybersecurity company, and it's constantly on the lookout for moving faster than the bad actors. I think that's also very clear to say that you can't just buy something and just think about, stop worrying about for the next 10 years. This is an iterative process. What we see here again is that many of our customers do not deem themselves being a cybersecurity expert. They don't want to be doing this. They don't have the means to do this in-house, and therefore, again, resort to the right partner to deliver on that basis of solidifying their own operations. And then the other piece is expertise. It's also new for a lot of people. I always like this to the German Autobahn, where the crypto native folks go on the left lane pretty fast with a sports car, and they know what to do. And then there's this like right lane where people generally have to drive relatively slow, and that could be more like the ones which are adopting now. And it's an iterative process and a learning curve, so also we deem ourselves of supplying our prospects and customers with a lot of expertise, the do's, the don'ts. We have a team in-house even that is called Business Solutions. It's a consulting arm almost, where we are happy to engage with any prospect out there and really like look under the hood of what's possible and what's not possible. The last three things I want to say, I absolutely think it's not too late to get into digital assets. It's an iterative process. I think that's why we all sit here. Last year was relatively mild. There were some folks in the room, but that was due to Corona. Now we have more people here, so I think it's really great to see you all here. Apparently you must be always interested in crypto and digital assets, so that's fantastic. So we absolutely think it's still early. I can definitely tell you from our customer base and prospect base and what we see, yes, it's crypto native first, but that is dramatically changing to large-scale bank operations. You might have seen we created the first Aussie stablecoin with ANZ, a major tier 1 bank globally, announcement last week, and there's many, many projects to come where we will definitely and anticipate much more bank operations looking into digital assets. And it does not mean that it needs to be crypto. It could be tokenization, or it could be anything else, or it could be a combination thereof. So it's not always crypto, crypto, crypto. There's so much else that can be done. And yeah, it's possible. I think it's possible if you choose the right partners or partner to yield all your opportunities. And we think you should absolutely not wait. I mean, even if it's much more an educational perspective, we do see this also, that people are on an educational lookout. Look, we're quite happy to obviously engage with the customer and prospect base to really give them the capabilities to make sort of the utmost best decision on where to go. And maybe that's even a transient decision, right? Where on one side, you don't want to wait for a regulator to approve a possibility to do something that is obviously bound by regulation. So you might actually set up something which could well be sub-custody, and it's a transition from sub-custody to direct custody and thereof, or maybe a combination thereof. So I think it's not always black and white that you can only do one or the other and you can't do both.